The following presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Looking good, Billy Ray. Feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania, zip code 19174. And I would like to mention that we have a legal team working with our former describer of astro events, Mr. Norm Winsky, down in the, I just will post a chart in a second, but I got to get this this legal matter done because the legal team is working with this group out of Naples, Florida, known as Astro Tens, Mr. Norm Winsky, because yesterday he was calling about a possible bottom in the major markets that we look at, which are corn, not oats, of course, but soybean stocks and wheat. And this was the 20th of February. So as long as this works, Mr. Winsky will not be served papers from our extensive legal team here at Duke & Duke. That is a really amazing call, folks. He had that in his letter. I wanted to give him a heads up on that because we've had a heck of a move in some of these things already. As you can see, the soybean and corn markets have moved pretty good. And also wheat. Wheat's moved 15 cents off the bottom, and that was a major bottom that we'll talk about. The fact is, let me just do that right now because I think that's more important than anything that we're looking at in the DAX or any of these other things. There's just a lot of things happening, folks, because of the fact that I guess it's these different things that we're looking at as far as, well, let's get this up here. Now, this is only a partial chart. Now, I want you, I don't want to go into some of this. Okay, Jose, you're right. He's the same guy who said the Rams would win the Super Bowl. You know what? I guess we'll have to keep that legal team working on him. Very good, Jose. I forgot about that one. Just remember the one of the things of those four major fears is the fear of being wrong. You better get used to that one if you're in this business because it's going to happen all the time. Okay, let's just moving on. I wanted to show you this wheat chart because this is rather important. This is over the last couple years. You'll see the ABCD pattern at the top that we had there at 590. We've now come down. Yesterday's low was 486, I believe, and the Fibonacci number, the 61% retracement of the low from 2017, 2 years ago, was 477. Now, it's trading at 490 right now. I don't know if that means anything or not, but the challenge here is this. Take a look at the wheat chart over the past 3 or 4 years. Go back and look, and you're going to see something that'll just absolutely astound you if you're not familiar with pattern recognition. I did this work for Simon Lee of Sylvia's Financial yesterday, and 2 days ago, but it's a very interesting pattern that you should defy human nature and do the work yourself. All right, let's look at some of these markets because we've got a lot of things happening. I think the main one to look at here is the bond market. Let's just take a quick look here. Here's the bond market that everybody, including myself, thought that we had a chance for the market to get above this 147 level and get up to that 147.26, but that is not in fact happening. We've broken down now. The market has not reacted well. This is a situation where you've got the most bullish possible news that you could get, and the market is not responding to it. That is not a very good sign, folks. We saw this in the opposite of this when Netflix, remember, the Dow was down 600 and Netflix was up that day. What did Netflix do? It went up another 25%, gapped up the next day. So this is not a good situation looking at that. Another one, well, what is news for the bonds is that, from what I understand, and I'm not a fundamentals, but they said that Mr. What's his name, Jerome Powell, was going into the dove camp, and they thought that they would let the market move a little bit before they decide on interest rates. That's what it looked like. Maybe I misread it, but if I did, I apologize. If we take a look at the high-grade bonds, the same thing we're looking at here. This is also a function of the the crude oil having a pretty good rally, which it certainly has. But this one also is sitting right up at that 61% retracement. That looks very interesting. If I am wrong on that, oh, thank you for putting in the rules from Mr. Tudor Jones, David. That's really good. I should read those because these are just fabulous. Lose your opinion instead of your money. Don't ever average losers. Folks, that's the number one of all. I mean, you can do a lot of stupid things. You can trade without a stop. You can trade without money management, but if you ever start adding to losers, you're doing the single worst thing you can possibly do, because you're wrong on the position that you have, and you're exposing yourself to more margin problems. Never trade in situations where you don't have control. If you have a losing position that is making you uncomfortable, the solution is very simple. Get out. As W.D. Gann said, when in doubt, get out. Don't be too concerned about where you got your position, where you got into your position. The most important, the rule of trading, is to play great defense, not great offense. We saw that when the Rams smashed the, excuse me, when the Patriots smashed the Rams offense on Super Bowl day. Every day I assume every position I have is wrong. Boy, that's really good, because you're thinking, how much do I have at risk, not how much money I'm going to make. Don't have an ego. Always ask yourself question and your ability. And that's what I like that. Every day I assume every position is wrong, Mr. Z is saying. Well, you don't have too many of those, Bubba, because you're one heck of a trader. I can certainly promise everybody that. Anybody that watched your posts that you have in here will certainly attest to that. Now, let's take a look at a couple other of these markets that we want to look at. Since we were just chatting about the bonds here, I wanted to bring up the bond that we're looking at here. This is the 4-hour chart on that German bond that we've been talking about. If you remember that area up there at that 166 and change on the long-term weekly, that's over a 2-year period. That is a bearish Gartley up there. And we've been up here now for about 3.5 weeks, and now we're starting to possibly turn down. Whether that's going to be the case or not, we'll have to be able to see if that is going to be the case or not. Now, if we want to take a look at the next one that we want to see, of course, which is the DAX on the 4-hour chart, we want to get that up here. And we're going to move through these because we had a pretty active night last night with some of the news saying that the China deal was getting close. If you can believe anything coming out of the government, that's up to you. But you'll notice we do have a butterfly top up here over the past month, starting in February. We did complete that, and that is a very interesting pattern. If we move on to the next part of this, which is the shorter time frame, in this, and if I can just find it, here it is, got it right here. Hold on, boys and girls. Here we go. Here's the one for you can see after we made that number up there, we came down and made a small little bearish Gartley at that point. The British pound, yes, I can certainly do that. Let me finish this. I will do this right after the break here. So we'll be right back. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, folks, we're back, and we're going to take a look at the British pound. The first chart that I posted, of course, is the long-term weekly. You can see down there at that 14765, which it hit twice. Was a beautiful 78% level on the long-term weekly chart. And if you'll move into the daily chart that's just posted recently here, we're going to be able to see that 1.2765 on the weekly. You'll notice that we did have a very strong rally from there. We completed an ABCD pattern up there at that 132 level. And then the interesting thing occurred, which I thought was rather important, is the fact that you had 3 weeks of a down move right into that 78% level at 128, and we're trading now 180 pips higher than that. This is in the midst of all the baloney that's going on in Britain, much like the baloney that we have here in the United States, and they're having the same thing in Canada and Venezuela. So if you want to have some fun, go into politics. Okay, take a look at this British pound, though, very, very closely. After we had that 3-week down move, we didn't quite make the 61% retracement, but we did hit the 78% retracement off of the point C. This sets up an ABCD strategy, taking you up above those highs that we made way back in August at 135. Folks, this is my personal opinion, backed up by some of the people I know across the pond. I believe this Brexit thing is just going to go bye-bye. In other words, by the stroke of a pen, I don't know if you know this or not, but by the stroke of the pen, Parliament can disavow that election. I know it seems hard to believe, but that is a fact. That's a fact that was told to me by two very smart people from across the pond. So let's pay a close attention. We're having a lot of politicians dropping out over there and some new players coming in, but it's going to be interesting to watch. But these charts are basically telling me that is bullish to the British pound, and actually the euro, even though it's has a bearish longer term time frame. If we can get the euro above this 114.50 level, this is also telling you that the European Union might come out of this okay, and maybe all this trade stuff will be all right, and maybe the world will be a good place. Who knows? We'll have to be able to see what's going on. Anyway, we'll be able to see how this see what things are going on here. But boy, they have so many They have more regulations over there in the UK than you can ever imagine. It is really imagined. By the way, I forgot to post the chart here of the FTSE because I do believe you ought to be able to take a. This is one of the reasons why the markets started to turn down last night. We got up to the 78% level, up there at that 172 level. Excuse me, at 72.50, and then we backed off a little bit. But that was the primary reason that things were going along, in that area. So let's just remind ourselves that pay attention to the charts and not so much to anything else, and you usually be doing a little bit better than most. That's really what we're trying to look at here. But that pound does look like it wants to go higher. There's no ifs, ands, or buts. We still believe, and I have to stay with this until this euro gets above the 114.50 level, but we still have a really strong chance here for this euro to be a, hold on just a second here. This is the long-term weekly. Now, this is really important, that level at 112. Now, we're trading at 113.60 right now, and that's up 140 pips from that low at 112.20. But if we get below that low, that's gonna be a game changer. I don't know if it's going to happen or not, but it's held that low. That means it could be a double test of that 61% retracement. And you've got to respect it. Well, I think you should respect those numbers. That's the main one that Mr. Leonardo da Vinci worked on quite a bit. But if you'll watch that very closely, above this 114.50 level will be a game changer. That means that the euro is probably going to hold this level, and that dollar index is going to come down quite a bit. Now, we've tested that 97 level once again in that dollar index. We talked about that last week. We talked about it on Tuesday, and we're going to talk about it again today because it's that important. Because if we get above that, in that 172 level, that's going to be a game changer in the dollar index, and we want to be able to, watch it very, very closely because it's something that should be paid attention to. There's my 2 cents worth. Let's move over, talk just a tad here about the gold and the silver. Here's where we were on silver coming into the week. Let's just get this up here. I think it's important to pay a little close attention to that. You'll notice here that we're looking for the market to get up to that 1660 level. And folks, to me, I believe that they've had a really bad problem here because this was as of yesterday. I've updated the chart. If I can just find it, we'll be in good shape. But that's what's happened with the silver market. All it did was go back and touch the highs of 3 weeks ago and couldn't get above it. I mean, that's not a very good sign. So I think we're in for a pretty good correction here in the gold market and the silver market. Silver's already dropped 45 cents from the high, which is well over, $2,100, whereas gold only dropped $1,500. I expect there'll be some strong support down $17 from the high. The high was $13.49. 17 from that is 13.32. So far, last night we got to 13.35, but watch 13.32. Below 13.32, you'll probably see a $34 correction in the gold, which would take you down to the 13.14 level, which was, if you remember, one of those breakout levels. So that's another one that we're watching relatively closer. And the other one that someone just asked about was the euro. Let me just show you what we're looking at here. This was a little trade that I did last night. It made the first objective of 30 pips, but we had sold it at that ABCD level at 113.60. We came down to 30 pips, stayed there, and now we went back above that. That's suggesting that we're getting ready to move higher. Now look at that ABCD pattern going back from January the 8th down into the 24th of January, up into the 30th of January, and down into the 15th. It's a perfect ABCD. I mean, you just can't make it any more perfect. The time and price are equal. The AB leg is equal in time. The CD leg is equal in time. That's why that level down there at that 1220, 112.35, 112.40, 112.20 was so very, very important. And that means that if this thing can get above this 114.40 level, which would be above the last correction that we made, that's a very, very bullish sign. But it's got to do that. Right now, it's still tossed up in the air of whether that's going to continue, that way or not. But we'll have to wait and see. We're going to finish one of these others that is relatively important here. With the we want to talk about hogs tomorrow on the next segment here, and we also need to talk about the grains, because we've had big moves in corn and big moves in beans and relatively good move in wheat and meal. So there might be a possibility that this Chinese thing is going, or maybe that lunar thing that we had with that full moon and Mercury doing what it's doing, maybe that was some type of a bottom. We're going to have to wait and see. We don't know for sure, but that's always a possibility to look at it. But we certainly want to look at David, you are a wealth of information. The four most important words in investing is "it's different this time." Sir John Templeton, God bless his soul. 877-927-6648. Stay tuned for my specialty, natural gas.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're taking a look at the long-term chart of natural gas. You can see the possibility of that triple bottom coming in. Now, I don't know if these patterns are going to work, but nobody else does either. All I'm doing is trying to find a place where we can enter, without having to, to sell the farm. But if you'll take a look at this shorter term version that we get here in the natural gas, I think it's interesting because what happened here is that we made a slightly lower low by just not even $100 from the low on February the 7th. We made that new low on February the 15th, and we've had a pretty substantial rally. The market's rallied about $1,400. In my opinion, that is a very important thing to look at, but we really need to get it above those old highs, up above that the 2.7 area. Then it's got a relatively good chance. I know there's a lot of cold weather, and this stuff has dropped, but we expected that because it was a deep freeze there and the stuff was going down. Another instance of, it's doing exactly what you'd think it should be doing. So that's something that you pay attention to when you're doing some of this. The reason why I'm bringing a lot of these things up to you today is because they're doing exactly the opposite of what the market says they should be doing. So that I don't know. Now, here's another one that's interesting that it was brought to our attention by our good friend yesterday, Mr. Rich Anderson. This happens to be the June the June hogs and August hogs are the ones that should benefit from any swine flu. But folks, from November to February, they've had a 13-cent per pound drop in hogs in the midst of a terrible swine flu epidemic in China. Well, what happened is someone from, I think it was Canada, said that it was really a bunch of fake news. So I don't know if that's the case. But anyway, look where we are today in the June hogs. We're sitting exactly at the 78.6% retracement level, and we're also at a 3 drive to a bottom pattern. And if you want to add to the fact that yesterday on that down move, there was a drop in open interest in June hogs, and that means there were shorts were exiting the market, means that it has a possibility of having a bounce in this area. So that's all we're looking at here is just looking at numbers and looking at little patterns. Sometimes they work, sometimes they don't, but that's what we're watching as we look at some of these things unfold each day. So now, I think we covered everything. Let's see, any other questions that anybody else might have in the den, because I covered the main things. Boy, it went very, very fast here. So let's just not worry too much about that. Okay, let me get another one here. Oh, someone's asking a question about the webinar yesterday with Adrian Tilgare. It was very, very interesting. They had a lot of smart people in there. My friend Tom Hugard from the UK was there and asked a whole bunch of questions. Tom is one of the best pure traders I've ever met. He has the psychological strength of Hercules. Believe me, he really knows the psychology of this, and he brings it to all factors of his life too. So it was really fun, to take a look at it. Yes, the soybeans still look good. Let's take a quick look at those. I think that there's a chance on some of these that we might be making a pretty good bottom in here, but we need to look at the July beans if that's what we're going to look at. And here's what I was looking for in the July beans. I wanted to see, the market come down, to about the 875 level, and we couldn't get much below $9. So that, and then the meals had a very strong rally, $400, $500 in just a matter of a short period of time. Soybean oil has moved up too. Whether this is related to anything that happens with these Chinese tariffs, I don't know. But frankly, I think that Chinese tariff stuff has pretty much, already been taken care of in the market, but we'll have to wait and see. Give me 1 second here so I can update what we're looking at here this morning, because here's one that's very interesting here, folks. That is the one that is the Treasury bonds. We talked about that today. I wanted to bring this to you because we're almost at a 60. Let's just do this right now so we can look at it together. No, it's a little bit lower. Let me draw it in so we can all see it, because it's a beautiful natural trend line in here. You'll be able to see it together. And here we go. We'll put this up and take a quick look at it. Now, here is, we went up to the 61% retracement in bonds from our January high. We hit it first on January 31st. We hit it again on February 8th. We hit it again on February 19th, and we hit it again yesterday on February 20th. We hit it 4 times, and now we've dropped well over $1,500. The 61% retracement of that whole move from the 18th of January to the 20th of February, one solid month, comes in at 115.12. We're only 14 ticks away, roughly $450. So it looks like that's where it wants to go. If you'll look at the move down in February, from February 31st into February the 5th, that move dropped 2 full handles. So if we drop 2 full handles down from where we are now, that's going to get us, our bottom is going to come in at 145, and that's going to be the 78% level. Now, if it gets below 145, you know what the answer to that one is. It's via con Dios. I mean, it is gone. It's sayonara, whatever you want to say. It is heading lower if we get below 145 in those March Treasury bonds. Now, we'll be coming into delivery here, or moving over from March into June pretty quickly. So watch this closely. Now, this is very interesting. Long term, this is a very bearish chart. We've brought this to your attention many times, that interest rates do look like they're going to go higher and not lower, just by, you know, watching some of these things that we're watching. Okay, now, oh dear, I hit the wrong button and I lost the chart, but that's the way it goes. Trouble in River City. Okay, let's move on here to one other one that I wanted to cover. Just a second here. Shucks, just a minute, boys and girls. Doggone it. Let's move on to, here's another one that is really critical level here, and this is cotton, the fluff. Let's get this up to take a look at it. I don't trade cotton, but several people have asked me about it. We made a double bottom down here in the cotton around the 71 level. That's a big ABCD down over the past 8 or 9 months. And you'll see the 1.618 expansion there. We've basically hit that twice now. And so this is a double bottom test without any stretch of the imagination. The entry point here is you just have to enter the market and just put your stop below that 70 level. Now that's going to be more than $1,000. So if you can't trade the cotton for $1,000, you've got to find a shorter term entry point by going to a 30-minute chart to give you a better entry point, so you don't have to risk that total amount. Because if you're on the daily chart, the risk is going to be much greater than it is on the 15 or half-hour chart. So that's primarily what you probably ought to do. But watch this cotton. I think it's got a way to go. And yes, Ruby, I will cover sugar when we get back from our break. And then we will look at also the cocoa, and we'll be looking at the, we're going to look at cocoa, and we're going to look at sugar when we come back from the break, which is coming up just about now, I believe. So we'll be back, 877-927-6648.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, we're going to take a look here at sugar the sweet. You'll notice that in June and October we made a double top. The reason why you need to count that as a double top is we just went slightly above the highs in June and immediately went back below that level. And as you can see, that was the right thing to do. We came down, we tested the 61% retracement at 12.15. That basically dropped down to 11.70, missing the 78% level by just about $1.50, $150. And then, of course, it had a pretty good run up to the 61% retracement there in January, just absolutely spot on. And then it gave you the actual best spot to buy it, and that was at 12.45. And that sets up the ABCD pattern that we're looking at right now. Silver trading today around 13.45, I believe. And that says that we might go up to this 13.80 level. But there's also the possibility in the sugar that you could be making the very, very large ABCD pattern with the low in September at 10.80. The high in October at 14. You subtract that's $6. You take $6 and put it down to that 11.70, and that's going to give you a price in sugar at 17.70, and that would be a 61% retracement from the high that we made last year at, well, actually 2 years ago at $25 a pound. So that's what could be happening in sugar. We don't know if that's happening, but that's just a speculation. Now, if you bought that down there at that 12.40 level, you've got well over $1,100 profit in it. You certainly don't want to give all of it back. So, raise your stop so that at least you take $500 out of it, or use a trailing stop even. But, you certainly don't want to let this go to a losing trade because you've got that much of a profit in it. You certainly don't want to let the thing, go to a loser. That's not very smart, because that's your money. This morning when you see it on your equity run, that is your money. Now let's take a quick look at cocoa, hot chocolate, and we'll put this up here. You'll be able to see this is a daily chart. We followed this from the bottom that we had, that 3 drive to a bottom pattern. Then we had that absolutely perfect 135 pattern. The cycle low between October and December was as perfect as it was from December to February. The retracement we were looking at was at 61% retracement and a 78% retracement from the December low. That's the 135 pattern, and it's already made well over $1,500 in it. Here again, what you should do now is to put your stop at around 2260. and that would lock in $1,000 for you. And then you can see that if the 3 drive to a top pattern occurs up around 2,500, you would add another $1,800 to your war chest just by doing that. So it's basically a risk-free type trade. That's the main thing. Look at that little red box there, folks, because if 2140 failed, that was going to be 2,000, down to another bottom was going to be pretty much in the cards, but it actually held pretty good. And so that's the importance of the fact that it was good. Now, one thing that we didn't bring to your attention here on this particular segment was, if you look at the move between November and December in the cocoa, you see that time down, it's about 3 weeks. Take a look at the time down between January 1st and February the 1st. How much is that? That's 3.5 weeks down. They're almost exactly equal. Count the bars, and you'll see that they're almost exactly spot on equal. That means that time down is equal. That's that harmony that you're looking for, especially when it's setting at the 78% level or 61% retracement. That's where you've got your best possibility for for your gain. So we'll have to see what happens from here. But right now, stop at 2260. Profit objective we're looking at is 25, and that's what I would be looking at in the hot chocolate, because it certainly's got a pretty good a chance to get there. So whether it will or not, I don't know, but that's what we're watching in some of these things, to pay close attention to them, because these markets jump around a lot. And that's what they're supposed to be doing all the time, is jumping around a lot, and they certainly do that. Let's move on. One other question. Someone asked a question about Dennis Gartman's Fear and Greed. Let's get this up here. I'll blow it up here to take a look at it. This is, he sends this on to me here. Spike, but haven't ever traded it. It's now, cocoa is easy to trade, easy trade. Hold on here just a second here, and we'll look at this is the Fear Greed Index from Dennis Gartman. You'll see we're up into the fear area now that we've been through over the last few years, up around that 78 level. Now we have a request from our friend in the room, Mr. Z, asking to look at the composite chart. And all I've got to do now is to find it. You know what I need to do? I think you're asking the weekly is, where is it? Oh my goodness, I don't see it. Just let me pull this up here, folks. Only take me a second to pull up the composite chart for Mr. Z so we can take a quick look at it here. We'll look at it 2 different ways. We're going to look at it on the daily here. Let's get this up here and see where we are. All righty. Okay, here we are for the daily chart of this. By the way, those of you that belong to the TFNN 24/7, we were able to get our short sale off of the S&P last night. There it is, the daily. You'll see we're up a little above the 61% retracement. And if we look at this on the weekly, you're going to be here. Let's just get this up here just so we can see it just a tiny bit better. Hold on here. There we go. And here's the weekly chart of the composite. You're going to be seeing the same thing. The main thing here is, folks, that we've had a uninterrupted rally. We have not had a down week in the composite since December the 26th. It's been straight up for 7 weeks. In fact, this is the 8th day of the rally. That in itself makes it an outlier event. So, pay close attention to that, because it can be, really, really interesting to watch these things unfold. So I hope that helps, Mr. Z. I don't know if you wanted to see anything else. Please let me know. If you do, I'll be happy to do it for you. And pull up your weekly. Yes, that lower top, I believe, is forming, because you can see it in everything. You can see it in the IWM. Let's just bring it up so you can. They're all doing the same thing. Every single one of these indexes. The problem is it just keeps going up. Now, you have to, it's like when you're going through the pond, you got to kiss a lot of frogs before you find a princess. And that's what you try to do, and that's what we're trying to do, is to find 1 or 2 that, work pretty good. Right now, the one we did seems to be working all right, but we'll be able to see. Yes, there could very easily be a head and shoulders in that NASDAQ composite. I was waiting, of course, over the weekend. I will certainly add that to it, because I want to finish the week on it, because if it closes lower, you'd be looking at that, would be watching. Yes, that is a textbook. Let's just do that together. That would be a little bit of fun to do. Oh, we've only got a little bit of time. When you get back, I'll have this drawn for you for this textbook thing that we're watching here in the, oh, it's acting really good so far today. Let me do this weekly Head and Shoulders when we get back from the break, and we will take a really nice, oh, this is a nice one. Shut the front door and raise the rent. Good job, Tucker. Good job, Mr. Z. What it be? We'll be right back, folks, after we pay a few bills for our fearless leader, Tom O'Brien. We'll be right back.
We both know you've got what it takes to crush your goals with the will to make it happen. So why haven't you accomplished it yet? For most, the answer is fear. Fear is that limiting factor that stops us from getting what we truly want, but it doesn't have to. That's why on Wednesday, February 27th from 5 to 6 p.m., I'll be hosting my 1-hour workshop, Overcoming Fear in 5 Easy Steps. Hi, I'm Steve Rhodes, the 2018 Market Timer of the Year, author of Mastering Probability, and an expert in human emotion. Subscribers to Mastering Probability gain free access to this extraordinary workshop where I'll coach you how to bust through your barriers of fear. How you respond to fear is what sets you apart from the rest of the crowd. Look, this could be the most valuable hour we ever spend together. So come to the homepage of TFNN.com and begin your 30-day risk-free trial of Mastering Probability and take the next step towards the life you deserve.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've posted the long-term weekly chart of the the NASDAQ composite. Hats off to Mr. and also to Mr. Z. That is a classic head and shoulders pattern forming as we speak. If we close lower this week, that would certainly confirm it. We've only got 2 days to do that, but you'll notice that the left shoulder to the right shoulder is that's 48 weeks, 96 weeks between the shoulder to shoulder. The head breaks it right in half at 24 weeks. In other words, the market went from your left shoulder to your head in 24 weeks, and 24 weeks to your right shoulder, right in there, and it's also setting right at a beautiful 61, almost 61% retracement. But more important than that, folks, is if you look at the high that it made back in March, okay, and then you move that line over, you'll see that that line is lower on the right shoulder. So that is a bearish head and shoulders pattern. That's the only way you can define it. That's the way it says in the book that was written by Mr. John Murphy, and also before that, a fellow named McKinley Gartley. Harold McKinley Gartley in 1937 wrote about it, and it's also an important pattern to watch. So that is it. If we close lower on the week, you're looking at something that could get a little bit testy. You'd be looking at least 800 handle drop in the NASDAQ would be my opinion, but whether that's the case or not, we have to wait and see, because these are just patterns. Sometimes they fail, but when they don't fail, that means that they mean something. So it's just a probability, and you're looking at about 6 out of 10 chances in your favor, and that's pretty good because the payout is usually better than 2 to 1. So with those types of odds, that's worth a look-see. That's basically, what you're watching as you see this. Keep in mind, folks, that these markets could turn on a dime and go up and make new highs again. Not a problem, because it's certainly possible, but we are in that zone, as Mr. Winsky said, when we had that super full moon, the blood moon, and also the Mercury at 0-degree declination. So guess what? We're going to see you folks tomorrow at the same time here at Duke and Duke, 100 South Broadway, Philadelphia, Pennsylvania. May God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN has put together the best lineup of live content for traders by traders every market day, featuring some of the most knowledgeable and respected minds in the business. TFNN broadcasts 5 days a week live from 9 a.m. until 5 p.m. Eastern Time. We have live programming every market day during market hours. Every morning, Larry Pesavento kicks off the trading day live at 9 a.m. and breaks down the opening bell with Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the TFNN Bull Bear Trading Hour, followed at 11 a.m. by the team at TD Ameritrade and Thinkorswim with Fast Market. Basil Chapman hosts the Tiger Technicians Hour at noon, Steve Rhodes at 1 p.m. with the Trader's Edge, Dave White at 2 p.m. with the Power Trading Hour, and Tom O'Brien anchors the daily lineup from 3 till 5 as host of the Tom O'Brien Show. Tune in to TFNN's Tiger TV on your computer or mobile device, and you can always find us streaming on YouTube. TFNN.com, educating investors.